Welcome back to Fast Market here on the Schwab Network. It's time to talk Tesla. A couple positive notes out today on the EV maker. Let's bring in Caroline Wood, senior markets correspondent here. Caroline, positive note out of Morgan Stanley. I don't know how much credence we should read into that one, but Piper Sandler also positive on this stock. It's having a nice pop today.
Hey there, Tom. Yes, Adam Jonas over at Morgan Stanley has been a Tesla bull for quite some time, but adding Tesla to as number one on his top pick on the U.S. autos list, replacing Ford, as you said. Taking a look at Tesla shares, they're rebounding today, up about 5% after falling 8% last week after earnings failed to impress. Those missed Wall Street's expectations, but gaining some ground today. Adam Jonas maintained an overweight rating on shares of Tesla and a $310 price target on shares. That's a street high, so about 35% upside from current levels. Morgan Stanley, Jonas, thinks that Tesla's efforts to cut costs has stemmed some of the downside risk for Tesla, saying the over $0.6 billion of restructuring charges recognized by Tesla in the quarter, combined with other actions, has helped lower the break-even point to levels where Tesla can still generate positive cash flow at an enterprise level, even with EV capacity utilization at 69% last quarter. Talked about Tesla cornering the market on zero-emission vehicle credits, saying we believe as more legacy OEMs pull back on their EV plans, combined with increasingly stringent EPA standards, that Tesla may achieve an even more dominant position in the market for highly lucrative ZEV credits going forward. Also bullish on its strong position in the energy storage market, and noted that Tesla's aggressively redeploying incremental resources, technology, and people, as well as capital, away from the auto side of the house, although they obviously are still making cars. In fact, pointed out that Ford spent far more time talking about EVs on their second quarter earnings call than Tesla actually did. It thinks Tesla really is at the epicenter of the AI revolution. That said, Jonas does think that near-term expectations around full FSD and robotaxis may be too high, and they do think, or he does think, that the long-term trend for China exposure from Tesla will continue to fall systematically. So not all positive, but pretty bullish with that price target that implies about 35% upside from current levels. Shares of Tesla up more than 5%.
Following Morgan Stanley's designation of Tesla as its top pick in the U.S. auto sector, the most valued automaker overtook Ford, and Tesla's shares surged by around 6.3% on Monday. According to the brokerage, investors are likely to concentrate on companies that handle climate change-related challenges. Therefore, Tesla's energy sector has the potential to outperform the company's auto business in the future. As legacy automakers scale down their plans for EV expansion, it also anticipates Tesla to establish a more dominating position in the market for zero-emission vehicle credit revenue, which in the second quarter saw it recognize about $2,000 per unit. According to Morgan Stanley analysts, we believe Tesla might be responsible for up to half of the credit sales in the market, enabling a 100% margin business for Tesla that the investment community might not have yet realized. However, Tesla missed Wall Street profits estimates for the second quarter and announced its lowest profit margin in over 5 years last week. This was due to the Elon Musk-led company offering steep discounts on its vehicles to offset declining demand. The brokerage expressed concerns about the future of EV demand, as well as Tesla's capacity to commercialize autonomous driving technology in China. Tesla has been placing bets on its autonomous driving technology, which is being examined by regulators due to security issues. The launch of Tesla's robotaxi, which was postponed from August to October in order to rethink some aspects of the vehicle, is eagerly anticipated by investors. Ford, meanwhile, saw a 20% decline on Monday, following a 20% decline the previous week when the carmaker revealed second quarter profit that was below projections due to quality-related expenses and fierce competition in its electric vehicle division. We'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Tesla's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Getting a bullish call from Morgan Stanley analyst Adam Jonas, calling the EV maker a top pick in U.S. autos, overtaking Ford. Jonas saying Tesla now has the opportunity to generate positive cash flow, pointing to several actions which have helped lower the break-even point. Adam Jonas, always, of course, Maddie, a market mover on all things Tesla. I would just point to, I just think we're getting better results out of other EV makers besides Tesla. When I talked to GM CFO after earnings last week, Paul Jacobson struck a very bullish note on how much, I think their EV sales are up 40%. They have a bunch of new models coming to the market that in many respects undercutting Tesla. That Tesla earnings report was not so great. So not to really poo-poo this Adam Jonas call, I mean, I think you're getting some better results out of their competitors.
Yeah, he talked about some of the defense mechanisms of Tesla, right? Things like cost cutting, restructuring, that has helped to kind of pull off the downside from being too far to the downside, right? But I think the big question for Tesla is how are they going to be offensive moving forward? Are they going to be able to have that robo-taxi? Sounds like that announcement still getting pushed back. Are they going to have a cheaper model moving forward? We also don't know when that's going to happen. Is the Cybertruck really the catalyst that Elon Musk purported it to be?
I'm seeing these things everywhere, Maddie. They're starting to pop up. I mean, I've seen one in orange and black within the past 2 weeks.
I haven't seen any non-silver ones. When I see them in Manhattan, it's like the weirdest combination of aesthetics in the world.
They're just big, dumb, stupid pieces of metal. I mean, they don't fit in a parking spot. I mean, if more of these start to hit the road, you're gonna have to reinvent roads. I mean, they're that big.
Well, it is a good point, but you know, Kevin O'Leary was on our show talking about how he said it's ugly and that's a good thing. That's why I'm investing, because he thinks nice. it's gonna be this thing that, you know, I mean, we're talking about it, right? Because we're seeing it and it sticks out.
Right. I mean, and one key risk, I would just add this too. If there's a change in the White House, this $7,500 tax credit to buy EV makers, if that goes away, if Trump wins the White House again, and that's a removal of a major catalyst for the entire EV industry, and I don't think that's priced into Tesla shares at all.
And Musk said on the earnings call that that's going to be bad for his competitors, but worse for them than it's going to be for Tesla. Whether or not that's true, I think is the big question for them.
May find out.
Right.
On Monday, Tesla's stock rose 5.5% thanks to positive comments from two different analysts. According to a report, Piper Sandler suggested that Tesla's most recent version of its full self-driving, FSD, software may have reached a significant milestone. In the meantime, Morgan Stanley outlined its reasons for favoring Tesla in the auto industry. Piper asserted that sales of software subscriptions are crucial to the company's profitability, citing favorable evaluations of Tesla's most recent FSD software on the social media platform X, which is controlled by Tesla CEO Elon Musk. As a result, the maker of electric vehicles, EVs, needs to increase subscription sales in order to see a return on profit. And the secret to that is creating and marketing a brand new electric for less than $30,000. If the latter task is accomplished, Piper thinks it will spur demand for FSD subscriptions, and if FSD is implemented well, Tesla will be able to increase the monthly cost of FSD by 5 times, to over $500. This pattern, according to the expert, will converge around 2030. According to Piper, at that point, if Tesla is selling more affordable EVs, it will have more chances to market pricey self-driving software, which would generate substantial profit margins. Longtime supporter of Tesla, Adam Jonas of Morgan Stanley, is cited today as saying that the stock is a buy and that it will climb 40% this year, but he also warns that expectations for FSD in the near future may be too high. It's possible that both analysts will be accurate. By 2030, Tesla should have ironed out all the bugs in its FSD software, allowing it to capitalize on a spike in sales of new Model 2 EVs. When the CEO of Tesla discussed autonomous driving on the company's most recent quarterly conference call, he made his point quite clearly. He said on July 23 to analysts, "Their Tesla shares ought to be sold. You should purchase Tesla shares if you think the company will sell autonomy." Musk continued, "I still find that most people are genuinely unaware of the system's effectiveness." He continued, "And I would encourage anyone who wants to learn more about the system to just try it out and let the car drive you around. People are likely to stick with the system after they've used it. That's why it's so intriguing. And I believe that even fully autonomous driving without supervision will significantly increase demand. It does, of course, take some time to accept Musk's vision of a world with autonomous vehicles." So what does this really mean for Tesla's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks. Enjoy a limited time 8.1% APY on idle cash for 3 months and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
You know, it's interesting, Caroline. If you recommend Tesla like these analysts did today, and boy, I would like them so much more if they recommended them about 175 and not 230. But the thing is, for them to recommend this stock without really giving the robo-taxi and all these other things that a lot of people are being bullish on, away from EVs. He's giving a recommendation or a price target raise based on EVs. Am I getting that right? And his basis is that they're getting the production down and lowering costs for EVs. Because, you know, if you came out and said, "Oh, I'm bullish on Tesla because of robotaxi," boy, I would. That sounds a lot better. But this is something that's kind of going against the grain with a lot of analysts.
No, I mean, Adam Jonas over at Morgan Stanley has had that $310 price target for quite some time. So it didn't raise the price target, just added it as its #1 pick to the U.S. autos list. So to give him credit, it's not just, I can't remember, we talked about it a few weeks ago. He actually broke down how much is because of the auto business and how much is AI. I have to go back and check my notes, but a large portion is because he thinks that Tesla is at the epicenter of the AI revolution. So it's definitely more technology based. You know, Piper Sandler was also out with a note today. 310, I said, is the highest price target on the street. Piper Sandler is not far behind with a $300 price target, overweight rating. That analyst did focus more of the note on FSD and actually some of the hyperbole surrounding Tesla's FSD, saying that investors have kind of learned to ignore that. Obviously, the robotaxi event was delayed from August to October. And he's basically saying that, you know, investors are kind of giving Tesla a pass for that, but said, judging based on reviews on X, the update to version 12.5 is revolutionary. So the analyst at Piper Sandler is making the case that delaying that robotaxi event might not be a ploy to distract from falling EV sales. Rather, it could catalyze a realization that full self-driving matters more than anything else for Tesla. So Piper Sandler expects self-driving take rates to inflect sharply upward, looking further out by starting around 2030, makes the case that by the end of its 20-year forecasting period, 100% fleet-wide FSD adoption for Tesla, and says prices for it will rise too. It's currently around $99, thinks it could rise as much as to as high as $500. So a longer-term call in terms of FSD, especially since we know that it's been delayed even further, but said, just like cheap flip phones, we don't think anyone will buy non-FSD cars eventually. So that note definitely geared more towards FSD. But to Adam Jonas's credit over at Morgan Stanley, he's been a bull for quite some time, and it's not just because of EV numbers.
Yeah, and then you have to take into account he was bullish on Ford before. That stock's down about 12.5% so far this month after their earnings. So We'll take that with a grain of salt, I think, on that outlook there. All right, thanks to Caroline Wood, senior markets correspondent, here breaking down.
In 2016, he stated in his master plan, Part 2, that you will also be able to add your car to the Tesla shared fleet just by tapping a button on the Tesla phone app and have it generate income for you while you're at work or on vacation. And then in 2019, Musk declared that next year, for sure, we will have over 1 million robotaxis on the road, which sort of didn't happen. During the recent call, Musk addressed the postponement of the debut of its robotaxi from next month to October 10, telling analysts, "I wanted to make some important changes that I think would improve the vehicle." Moving it back a few months allowed us to improve the robotaxi as well as adding a couple of other things for the product unveiled, he said. Despite the hiccups, the potential for full self-driving hasn't been lost on analysts, some of whom recently rebooted their Tesla stock outlooks because of it. This Street Pro's Ed Ponce wrote on July 26 that Tesla's earnings came up well short of estimates, and a contraction in gross margins was concerning. But investors reacted positively to the Austin, Texas-based EV manufacturer's conference call, much of which focused on areas other than EV sales, he said. Ponce said investors may be underestimating the potential impact of full self-driving, noting that Stifel analysts chose to accentuate the positive by writing, energy generation and storage revenue easily beat expectations. FSD and robotaxi impact will be critical value drivers. If you view Tesla as just an automotive company, then some negativity is warranted, Ponce said. If you consider Tesla an AI play, the equation changes. Now factor in energy generation and storage, robotaxi, Optimus, and FSD. He noted that it is difficult to gauge how big of a role each of these will play in the future, and it's impossible to know for certain what other products may enter the mix. That's what makes Tesla both exciting and a bit frightening, Ponce said. Analysts have the difficult task of trying to understand cutting-edge products that are still in development. Piper Sandler said in a July 29 research note that it believes investors have grown accustomed to ignoring Tesla's hyperbole around full self-driving. However, judging by reviews on X, formerly Twitter, which Musk bought in 2022, Tesla's update to version 12.5 is revolutionary, the firm said. Piper Sandler said it believes investors should consider the possibility that Tesla's decision to host a robotaxi event on October 10 isn't a ploy to distract from falling EV sales. With all of these considerations, Tesla is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Tesla stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think Tesla is worth. If you're interested in learning what other companies, like Tesla, have been up to lately, click on the next video on your screen. We'll see you there.